JP, good to see you. How you doing, brother? How you been? Pablo, good to see you as well. How you doing? How you been? For a second, I can see Pablo's comment, but now I can. There we go. Evening, Miles, CMF. Jason, good to see you as well. How you doing? How you been? It's good to be back. Funky brother, good to see you as well. How you doing? How you been? How you been? I've been doing good. Busy. Very, very busy, but I've been doing good. Just trying to pin live. Happy Monday, Miles of CMF. LJ, can see you as well. How you doing? Congrats on XRP ETFs. Funky brother, let's go. The XRP ETFs are doing pretty damn well, to be fairly honest. Hello, Miles. Good to see you, brother. Good to see you as well, T. How you doing? I posted it's live show 407. It's actually live show 408 is the correct one. Good evening, Miles and CMF. Manny, good to see you as well. How you doing? Hope you had a productive weekend, Miles. I did. There's a lot of work to be done. So is the price? Yeah, regarding the whole market collapsing, we are, bad looks of it, we all seem to be doing a reversal, mostly because the majority of the market space essentially thought to themselves that we're going to go on the downside. And what tends to happen is when a lot of people think that something's about to happen inside the market space, the opposite always happens. So a lot of people thought essentially we're going to be seeing much more lower lows in Bitcoins. And I'm not saying it's not possible to see much more lower lows in Bitcoins. Anything's possible inside the crypto market space. But a lot of people did thought that we could be reaching much more lower price targets in this moment in time. It seems like the market has done a reversal and did the exact opposite of what people thought was going to be happening. Okay, pin the live. There we go. So let's do intro disclaimer. What we're going to go from tonight's live. By that time, everyone should be tuned in for the first part of the live show. So, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m., long time onwards. For the most recent news regarding cryptocurrencies, CBDCs, AI, politics, regulations, all the information you should know about regarding the world completely transforming into a digital space. This is episode 408 of the CMF Live show right now. Everyone's watching. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And also, thank you so much to everybody who has already liked and retweeted this live show on X. If you're watching this on X right now, if you're watching this on YouTube, thanks so much to everyone who's also essentially smashed the like button. CMF members, if you haven't smashed the like buttons or the retweet buttons, smash the like buttons and the retweet buttons as well. But thanks so much to everyone who has already done it. And we do Q&As on this essentially live show, which means if you do have any questions, put it down in the comment section. More than happy to help you out. Hi, Miles and all. Paul, good to see you. So how you doing? Perfect timing, Paul, because we're about to go for the first part of the live show. So on tonight's live, we're going to be talking about essentially what's been happening inside the market space in terms of Bitcoin's price points, in terms of the institutional flows into essentially ETFs, and what other institutional flows we're having. We're going to talk about essentially what's happening in China regarding Bitcoin mining. We're going to go through some JP Morgan news regarding the banking sector. Essentially, JP Morgan apparently is putting a bigger bet on AI than it is on Bitcoin. We're also obviously going to go through some Ripple news on tonight's live, as we always do. But before we go through the first news, which is regarding Bitcoin, let's go through the comment section first. So let's see where we're at. Hi, Miles, and sorry I haven't been on for the lives, but I always watch the recordings back the next day. Joe, no problem, brother. Good to see you. How you been? Good evening, Miles and CM. Hope everyone is well. Good to see you as also on how you've been. So, Bitcoin. Bitcoin has achieved a significant milestone, breaking through the $89,000 mark. And currently essentially trading around $89,047 and much more higher price points on Binance, for example, USDT market space. This impressive Bitcoin price surge represents one of the most notable movements in recent months, capturing essentially attention of investors worldwide. The current Bitcoin price surge didn't happen overnight. Essentially, several key factors have contributed to this uptrend of a reversal happening inside the market space. Institutional investors and essentially institutional adoption continues to grow, with more companies adding Bitcoin to their balance sheets, and moreover, regulatory clarity is essentially in major markets has provided investors with much more increased confidence towards the crypto market space. We're going to talk about the Japanese market space on tonight's live as well, because they have introduced a new regulation. Market analysts point to several technical essentially indicators that support that Bitcoin's price essentially surge happening. Strong buying pressure from institutional investors, which is true. While the retail section, not everybody inside the retail section, but while essentially a minority or even a majority in the retail section that essentially were selling, the institutions were buying. Essentially, there was Bitcoin inflows happening in terms of ETFs. We had that essentially those 7 massive essentially Japanese firms that are entering the crypto space that did get a green light essentially from their equivalent of an SEC. So there's a lot of things happening inside the crypto space when this downtrend was happening, and also CBDCs were, in terms of research, study papers, and all that, were skyrocketing in the same month, which I revealed was quite a bit odd inside the market space. Positive macroeconomic events and conditions favoring risk assets right now. Increased network activity and transaction volume is happening. Growing mainstream acceptance of cryptocurrencies is back on board. Breaking above $89,000 represents a crucial psychological barrier for Bitcoin's footsteps. This Bitcoin surge price essentially places the cryptocurrency within striking distance of its all-time high. The current momentum suggests that if buying pressure continues at this rate, we could see even a higher levels in the coming days. However, experienced traders know that such rapid movements often come with increased volatility. Therefore, while Bitcoin's price essentially surge is exciting, it's essential to approach the market with cautious footsteps. I 100% agree. The latest Bitcoin prices surge demonstrates that cryptocurrency essential resilience and growing mainstream acceptance. While short-term fluctuations are preventable, the long-term trajectory appears promising, and the breakthrough essentially above $89,000 marks another chapter in Bitcoin's evolving story in a digital store of value. As you know, we are still essentially stuck behind Bitcoin's footsteps because there is no clarity yet as the time being. Remember, the successful investing essentially requires patience, research, and emotional discipline. Whether you're a seasoned trader or a new essential cryptocurrency investor, this Bitcoin price surge serves as essentially a reminder of market's dynamics, nature, and importance of staying informed. Not only essentially there are inflows happening right now in terms of Bitcoin, Bitcoin ETFs, and also Michael Saylor getting ready to essentially purchase another batch of Bitcoins, but Eric Trump also essentially tweeted out saying American Bitcoin, which did boost essentially Bitcoin's price a little bit more. Eric Trump recently unveiled his company American Bitcoin mining facility on social media platform X. The Texas-based operation represents a significant shift in how we approach cryptocurrency mining. Unlike traditional mining operations that rely on heavily essentially on fossil fuels, this facility utilizes cutting-edge technology and renewable energy sources to power its extensive mining network, which should essentially keep the Green Party, who's against Trump's family, happy that essentially Eric Trump is using green renewable energy to mine Bitcoin. The facility currently operates more than 10,000 essentially high-efficiency miners. These specialized computers work around the clock to solve complex mathematical essentially problems, thereby securing the Bitcoin network and generating new Bitcoin. Also, recent analysis essentially revealed that the M2 money supply and the US dollar index significantly increased essentially and put influence on Bitcoin's price cycles. Now, we've talked about the M2 money supply essentially at the beginning of the year, mid-year, even last year. And it does essentially put some sort of influence on Bitcoin's footsteps to reach higher points. Understanding these macroeconomic factors could aid more accurate forecast of Bitcoin's price movements, providing essentially valuable insights for traders and investors seeking to navigate market volatility successfully. The interplay between M2 money supply expansions and the US dollar index fundamentally influences Bitcoin's price. Data analysis indicates a delayed relationship with cryptocurrencies, often essentially tracking global liquidity shifts over essentially a proactive timeline. Now, industry participants, also including the US Federal Reserve and the European Central Bank, the ECB, play major key roles in setting monetary policies that shape the M2 expansion. Arthur Hayes and Raoul Pal have underscored how these essentially decisions ripple into the crypto market space. Increased global essentially liquidity is rocket fuel for risk assets, Bitcoin included. if the Fed turns out, essentially, if the Fed turns on the taps, BTC rips through, Arthur Hayes said. When central banks increase M2, the risk appetite grows, boosting Bitcoin and related assets, in other words, other cryptocurrencies. M2 essentially contractions, however, often essentially correlate with stalls or corrections of Bitcoin's price movements before that rocket movement happens. Financial markets experience profound essentially impacts from these shifts, with Bitcoin showing a strong positive correlation to raising essentially regarding the M2 supply. Stablecoin supplies also grow, with fiat liquidity predicting upcoming rallies. When we do have essentially downturns inside the market space, every time essentially we have a massive downturn or massive shift on the downside inside the market space, obviously USDT is printing essentially more, USDC is printing more, RLUSD is printing more, essentially PYUSD is printing more, and all those stable coins that are printing later on when the market does a reversal, essentially going to altcoins or Bitcoin, which boosts the crypto market space even further. So every time there's a downtrend, stable coins are printing. Think of it as essentially as if the Fed is printing to essentially boost liquidity inside the market space. Watch the global M2, the most important chart for crypto bulls. Bitcoin responds with a lag, but always follows the liquidity impulse, said Raoul Pal. Analysts observe that Bitcoin aligns with major M2 expansions, yet follows these liquidity injections with a notable time lag. This pattern has repeated across historical cycles, correlating strong with central bank policies, and predictive essentially trends suggest that increasing M2 precedes Bitcoin's price hikes. Stablecoin supplies reflecting fiat influxes often forecast also cryptocurrency surges more precisely than M2 growth. These dynamics highlight the critical essential interdependencies within the financial landscapes. So, one, regarding the stablecoins essentially printing through this downtrend that we had, all that essentially is entering towards the crypto space. Two, M2 money supply essentially back turned on. Think of it as the Fed essentially is printing again. That's going to be adding essentially more influence towards the crypto market space. Three, Eric Trump's essentially new Bitcoin mining facility gives a positive note towards Bitcoin regarding renewable energy. And four, that reversal is happening right now. So everybody thought we could go much more further down. The market played the other way around, which it typically does. When the majority thinks one thing is about to happen, the market tends to go the opposite, because otherwise everyone knows to short the market or to long the market. So before we go through essentially the next news on tonight's live, which is regarding essentially Bitcoin, Ethereum, ETFs, and so on, let's go through the comment section first, and then we'll go straight into the next news. But it all is looking good for the time being going forward. So let's see where we're at in the comment section. Good evening, Miles and CM. Hope everyone is well. So let's go. Are you in Boston? No, I'm in London. Hi, Miles and CMF. Stormy, good to see you. How are you doing? Good day, sir. What's the topic? Crypto, politics, AI, regulations, and licensings. What the heck is happening? I've lost total faith in everything. Every search I do, nothing is bullish, and all I'm saying is impossible for XRP to reach our inspirational prices. Help and restore faith. Surely we can't keep waiting and still be in positions in 12 months. What's happened to the $30, $50 by the end of the year, X? So regarding the price points, essentially $30, $50, which a lot of crypto influencers have said is going to be happening, and even 16 Research, the analytics firm, said is going to be happening. What they didn't factor in was a massive, essentially overdone government shutdown, which impacted crypto ETFs, which also impacted essentially the Clarity Act. A few things didn't happen due to a government shutdown. If there was no government shutdown, we could have had a Clarity Act. The ETFs could have been passed faster, and then we could have moved into much more, positive notes inside the market space. But that government shutdown regarding Democrats just wasting everybody's time and at the end agreeing to what Trump had to say was just a waste of time for everybody. So that was the biggest, essentially, pothole, you could pretty much say. What up, Miles and CMF? Ray, good to see as well how you're doing. But on positive notes, Paul, the market is still essentially heading, towards positive notes right now. It is restoring itself. Greetings, Miles and CMF. Lena, good to see as well how you're doing. Hi, Miles and CMF. Peg, good to see as well how you're doing. Denise, good to see as well how you're doing. Evening. You've also got to remember, essentially, Paul, that we do still have that Clarity Act on the way. The ETFs have just launched. You got to essentially see the timeline of the market goes into a massive downtrend right before Clarity Act, right before a multitude of ETFs coming out. It's all a bit coordinated on manipulation. So while the retail was selling, there was inflows happening from the institutional side. Governments were expanding inside the crypto sector. Even El Salvador today essentially bought over 1,000 essentially Bitcoins. So there's a lot of things happening inside the crypto sector that were being overshadowed by this massive essentially downtrend that we're having. And we had a very manipulated downtrend, to be fairly honest. Now, moving on to Merix. Merix begins clearing SGX Bitcoin and Ethereum futures. That is also a positive note for the crypto market space. Merix Group PLC began clearing SGX's new Bitcoin and Ethereum essentially futures on essentially today, starting today in Singapore, enabling institutional traders access to regulated crypto derivatives in the Asian market space. Now, Singapore is massive inside the crypto sector. They've also always been leading the charts in terms of the amount of regulations they've introduced compared to any other jurisdiction around the world. The partnership enhances institutional engagements in Asian crypto markets, offering transparency and regulatory compliance, potentially increasing essentially Bitcoin and Ethereum's trading volumes, and also, indirectly influencing other cryptocurrency volumes as well. Merix Group has started clearing SGX's new Bitcoin and Ethereum futures. This move marks a vital step towards regulated crypto derivatives in Asia. These actions aim to bring much more institutional, essentially grade clearing services to this emerging market space. Under the leadership essentially of Bill and Lo, Merix and essentially SGX have teamed up. They aim to provide transparent access to crypto derivatives. This launch essentially signifies a shift in accessible financial instruments in the region. Institutional traders now gain regulated essentially entry to Bitcoin and Ethereum through SGX's derivatives. The introduction of these essentially futures could boost trading volumes, also attracting notable financial activity from the Asian market space. The launch anticipates increased demand for BTC and Ethereum futures as these essentially exchanges cleared. They promise to add liquidity and security to the existing market space. This initiative has the potential and positive implications for spot prices and institutional acceptance inside that market space. XGX essentially move is a massive game changer. They're calling it from Singapore's side. Regulated exchange cleared essentially futures in Asia could attract billions in institutional capital. This is the next step in crypto's mainstream, said Raoul Paul, even the CEO of Essential Real Vision. Experts predict that regulated access to derivatives could welcome billions in institutional capital, such as acceptance, vital for maturation of the crypto space. The crypto space has matured quite a lot, even though it's still quite volatile, you can pretty much say as well, but it has matured quite a lot, from my point of view as well. Now, CME is what we're going to talk about next on tonight's live. So, while we've been having these crypto essentially downtrends inside the crypto market space, the CME record has essentially, in terms of contracts, in terms of crypto contracts, they've been smashing it. So, just to give you a positive note, 794,000 plus crypto contracts traded in one day. CME Group set a new record by trading 794,000 plus cryptocurrency futures and option contracts, driven by intense institutional and retail demand amidst the market turbulence that's been going on. This milestone underscores the rising essential preference for regulated trading venues during market uncertainties. CME Group traded essentially unprecedented 794,000 plus cryptocurrency futures and option contracts. The record sets a new high, surpassing previous volumes and highlighting the industry's shift towards regulated trading venues. The CME Group sets all-time new record highs, reinforcing its status as a leading derivatives market space. This surge reflects heightened institutional and retail demands for regulated financial tools aimed at uncertainties. The event surpassing this previous essential record of 728,000. Duffy and Tim, the lead company strategic decisions which significantly impact market stability. Tim, for example, the global head of financials and the OTC product CME Group, said, aimed ongoing market uncertainties, demand for deeply liquid and regulated risk management tools continues to grow, as reflected in these record volumes across the cryptocurrency essentially suit. Record volumes at CME triggered a shift in market dynamics, also bolstering essentially confidence in US regulated platforms. Institutional platforms also seek risk management solutions in volatile times. Financially, essentially, this raised the year-to-year date average volume by 132%, with prominent impacts essentially on Bitcoin and Ethereum derivatives, reflecting the broader market trends. That is brilliant news and very bullish news coming out of CME, essentially. It shows that the institutional demand and even the retail demand for the crypto market space is still there. The appetite for the crypto market space is still there, which is what we love to hear. Now, on the topic of essentially CME contracts and the stock market and ETFs, 5 new ETFs, 5 new crypto ETFs set to launch as market enters the ETF super cycle is what they're calling it right now. A new wave of essentially spot crypto ETFs is about to essentially hit the US markets, with 5 products launching over the next 6 days, according to Bloomberg's ETF analyst Eric. The rollout marks the start of what experts are calling a crypto ETF supercycle, with more than 100 new filings expected over the next 6 months. This latest launch schedule highlights just how fast the ETF pipeline is expanding. So we went from a massive market downtrend to now going into an ETF supercycle. Multiple issuers led by essentially Canary, Bitwise, Grayscale, Van Eck, Fidelity, Franklin Templeton are preparing to introduce products tied to Solana, XRP, HWAP, Dogecoin, Chainlink, and other major assets. There are 5 spot essential crypto ETFs launching over the next 6 days. Beyond that, we don't have an exact, but we expect a steady supply of them, likely over 100 in the next 6 months. Nice choice. Also, essentially, the launch calendar shows a broad mix of first-time listings and conversions of existing trust products. Several essentially Solana-based ETFs from Bitwise, Fidelity, and essentially Van Eck are queued up for immediate release. XRP is also entering its ETF essentially moment. Franklin Templeton, Bitwise, Canary, Grayscale all set to go live in the coming days as well. Grayscale continues transitioning its legacy trust products into ETFs, with Dogecoin, Chainlink, and XRP conversions all scheduled before the year's end. Bitwise is also expanding aggressively, launching new ETF formats alongside its new recent XRP ETF, which is actually doing quite well, to be fairly honest. Importantly, the SEC is also processing these approvals rapidly, you could pretty much say, signaling a regulatory environment increasingly comfortable for diverse digital asset ETFs beyond Bitcoin and Ethereum, because you could tell the market was fed up just having 2 ETFs, and that's hence why we're going to an ETF super cycle, because there's an appetite for the rest of the crypto market space. ETF analysts also have long predicted that once the SEC greenlights essentially Bitcoin Ethereum products, a rush of altcoin ETFs would follow. That prediction is now essentially fully materializing. More asset managers are racing to capture institutional demand, and liquidity across mid-cap crypto assets is expected to rise significantly as these products and essentially on the US exchanges. The accelerated ETF timeline also adds new narrative towards the crypto market space, regulated exposure expanding faster than any previous cycles, broadening essentially access for both retail and institutional investors. With more than a dozen crypto ETFs launching in November alone and many more lined up for next week, may mark the beginning of what most essentially active ETF issuance periods in crypto history. It's massive and extremely bullish news that essentially the analysts and essentially Wall Street, or even Eric, Bloomberg specialist ETF analyst, calling this a ETF essentially super cycle for the crypto space. So from the downtrend that we had, now going into an ETF super cycle is brilliant, massively bullish to hear, especially coming from analysts like Eric, a Bloomberg ETF specialist analyst. Now, on the topic essentially of going into a positive market space now, to rate cuts. Rate cuts apparently might be happening. So the Fed's bold move to protect jobs over inflation fears. December rate cuts. In a significant development that could reshape economic policy, the Federal Reserve, essentially President Mary Dale, has thrown her support behind a December rate cut, signaling a pivotal shift in the central bank's approach to managing the US economy. This potential essentially move comes as policymakers weigh essentially competing risks in uncertain economic landscapes. San Francisco, essentially Federal Reserve President Mary Dale, recently revealed her position supporting essentially a December meeting rate, essentially her support in terms of a rate reduction at the upcoming December meeting. She emphasized that the risk essentially of a sudden labor market deterioration now outweighs concerns about reaccelerating inflation. The Fed's essentially delicate balancing act aims to control prices without increasing essentially unemployment rates. This potential December rate cut represents a strict pivot from the Fed's previous inflation-focused stance. Dale's position suggests that policymakers are increasingly concerned about maintaining essentially economic stability and protecting job growth at the same time. Implementing a successful December rate cut requires navigating complex, essentially economic uncertainties. Obviously, essentially Jerome Powell's main concern was coming out of a government shutdown. He doesn't have the correct data that he needs to essentially come to a conclusion of a rate cut. But there are members inside the Fed, I mean, one being this, that are now coming out essentially saying that a rate cut is on the table in their point of view. Also, the Fed must balance multiple essentially competing priorities while maintaining credibility with markets and the public. Communication essentially will be essential to ensure that the policy shift doesn't create uncertainty or even volatility. The central bank's decision-making process involves careful consideration of forward-looking data and economic models. Dale's comments do suggest essentially the Fed officials are conducting through-and-through risk assessments to determine essentially the optimal timing and size of any rate adjustments. So, can we be essentially expecting some sort of a rate cut and essentially in December? It's a maybe for now. Before it was a no, which added more pressure towards the crypto market space on that downtrend essentially we were experiencing. Now on the reversal side, seems to be good going forward. Also, China is what we're going to talk about next on tonight's slide. So, in terms of China, everybody knows that China was the first country to do essentially the Bitcoin mine, essentially the banning of the Bitcoin mining situation, which made a lot of corporations, a lot of Bitcoin mining corporations to move to Texas from China. So it seems like China is about to be opening stores very quietly to Bitcoin mining. 4 years after Beijing banned crypto mining and trading, Bitcoin mining is quietly making a comeback in China. The report shows that individual miners and corporate essentially players are returning. They are taking essentially advantage of cheap electricity and essentially unused essentially computing resources in energy-rich provinces. After falling to zero in 2021, China's Bitcoin mining share has climbed back to 14% as of late October. This rise essentially is attributed to the quiet return of miners in different regions of China. Private miners describe a practical reality. Unused power should not be wasted, and crypto mining is a quick way to turn that extra energy into money. Growing profit opportunities and local conditions are pushing miners to restart operations despite national limits. This comes as officials are also searching for ways to use surplus electricity and empty data centers as well. Furthermore, existing data centers provide another boost to essentially mining activities in China, and some provinces essentially invested heavily in infrastructure for cloud computing, artificial intelligence, and digital services. But much of this capacity remains unused. Miners are now able to discreetly use the ideal essentially power and computing equipment to mine Bitcoin, turning previously wasted resources into profit. While mining activity is booming in China due to excess electricity, other countries essentially are shutting down crypto mining farms due to energy shortages, typically these smaller Middle Eastern countries. Mining machines, essentially makers, show clear signs of China's return. Canon, the world's second largest Bitcoin mining rig producer, earned a substantial portion of its global revenue from China last year. Even though China is supposed to be not mining Bitcoin, banning Bitcoin mining, and so on, even last year, one of the biggest essentially corporations that produces Bitcoin mining rigs made a massive profit from China. Which does raise questions of, did China really ban it, or did they just ban it on the news? This marks a sharp increase from the small fraction it earned in 2022. By the second quarter of 2025, China accounted for more than half of Canon's revenue, reflecting a growing market despite the official ban in China. Canon attributed rising sales to strong Bitcoin prices and US tariff uncertainty and the shifts in China's approach to digital assets. Although mining remains officially banned, some regulatory trends suggest increasing flexibility. Hong Kong has recently introduced regulations for stablecoins, and at the same time, China is exploring yuan-backed stablecoins to expand cross-border currencies as well. Enforcement essentially varies by region and is influenced by local economic essentially needs. Observers noted that the rival essential of mining activity signals one of the most important shifts inside the market in years. Estimates indicate that between 15 to 20% of global Bitcoin mining capacity now operates in China, despite the ban on Bitcoin. 15 to 20% of essentially Bitcoin's mining comes from China. 15-20% is tremendously high for a country that banned Bitcoin mining. Analysts argue that essentially completely eliminating mining is nearly impossible in areas where cheap electricity and essentially there is ready infrastructure good to go. Legal experts also predict that government policies against mining are likely to loosen gradually because the activities cannot entirely be stopped. That's also positive news essentially for cryptocurrencies and for Bitcoin, to be fairly honest as well, due to essentially China's ban on Bitcoin, but then showing essentially Canon, one of the essentially the second largest Bitcoin mining corporation, showing there essentially that China has been one of their biggest buyers this year, essentially in Q2, also essentially even last year, which just shows that China has not been out of the game, to be fairly honest. Now, we're going to move on and talk about JP Morgan, because JP Morgan has come out with an interesting perspective, which is betting Bitcoin against AI. But before we talk about that, let's go inside the comment section first. Let's see what's happening inside the comment section, and then we go straight into JP Morgan news. But so far, the news has been quite bullish to move the market forward. So let's see where we're at inside the comment section. Welcome back, Miles and CMF. Mickey, good to see you as well, brother. How you doing? Good evening, Miles and family. Susie, good to see you as well. How you doing? Good to see you as well. Hello, Miles and CMF family. Scott, good to see you as well, brother. How you doing? Hope that you had a good day. I had a very busy day, Scott. Let's go share the live. Let's go. XRP, XLM, XDC, HPRO, all excellent projects. Hello, Miles and CMF. Ghost Runner, good to see you as well. How you doing? Let's go, Miles. Let's go, Scott. XRP will do something good before December 31st. Just my humble opinion. Let's go, Scott. If the ETF companies are buying the XRP off the OTC or dog pool, how will the price go up? Well, if they're essentially, in terms of the ETFs, the companies that have the ETFs, for example, an XRP ETF, and essentially people buying XRP ETFs, 2 to 3 days later, it would essentially show in terms of, you can see volume, because those companies would have to go out essentially, back their ETFs with XRP. Now, depending on what their contract states, it could be some fiat, some XRP, and so on. That's what essentially shows after 2 to 3 days when it's all essentially cleared. Regarding essentially over-the-counter, essentially buying XRP over-the-counter, the OTC situation, that essentially is when there's so much essentially activity happening over-the-counter in terms of buying purchase on XRP. Indirectly, that would essentially impact XRP's price movements indirectly, mainly because people would see the surge happening over the counter, and then some people will start taking their XRPs off the exchanges, which could essentially create some sort of a squeeze situation. Also, people seeing the surge happening over the counter would influence other people to buy as well, because they're seeing the movements happening over there. So that's how essentially indirectly it would put pressure on essentially XRP's price to go a little bit higher and higher. But in terms of ETFs, 2 to 3 days it takes. In terms of over the counter, it depends on the amount of surge that would be happening over the counter. Now, AI and JP Morgan is what we talk about next. And that goes for any essentially over the counter for Bitcoin, Ethereum, XRP, Solana, and so on. AI is overtaking Bitcoin mining strategy, which is true to what JP Morgan is saying. So JP Morgan essentially stating that AI might be better than Bitcoin if you are a company out there and you're thinking about entering into one of these fields, Bitcoin mining or AI data centers. JP Morgan is suggesting that AI data centers might be more profitable. And it is something to do with a few Bitcoin mining corporations decided to go towards AI data centers instead of continuing to mine Bitcoin due to the high costs. And it was more profitable for them to turn their Bitcoin mining factories into data centers for AI. So JP Morgan revised its view of the Bitcoin mining sector today, signaling a stronger confidence in companies shifting their operations towards high-performance computing and cloud essentially workloads. The bank issued today upgrades for Cipher Mining and CleanSpark, while dialing back expectations for several long-established mining firms. Analysts also essentially Ringnold and essentially Charles said the industry is moving into a more defined phase of AI-focused infrastructure growth. Since late September, miners and data center operators have signaled more than 600 megawatts of long-term commitments tied to artificial intelligence computing, including essential deals with AWS, Amazon in other words, Microsoft, and Google-backed platforms, essentially Fluid Stack. With the momentum, essentially, JP Morgan now expects Bitcoin miners to unveil about 1.7 giga essentially watts of new critical IT capacities by the end of 2026, which would amount to roughly 1/3 of their currently approved power footprint. Cipher Mining also received the largest revision. JP Morgan upgraded the stock to overweight from neutral and increased its December 2026 price targets to $18 from $12. The analyst pointed to Cipher's recent 410 megawatt slate of HPC agreements and noted that the company's share prices has fallen about 45% from recent highs, creating essentially what they describe as an attractive entry point. The bank projects Cipher could secure around essentially the firm's new 285 megawatt site in Texas is also essentially estimated to hold about 200 megawatts. JP Morgan raised its price targets of iron to essentially to $39 as well, from 28, citing improved assessments of vertically integrated cloud capacities after the company secured a $9.7 billion deal with Microsoft earlier this month. A lot of these essentially Bitcoin corporations regarding the Bitcoin mining sector did shift over quite a bit, as I said, towards essentially data centers, AI data centers, because it was a lot more profitable for them. And essentially JP Morgan is rating their stocks higher as in terms of what price points it could reach in their point of view going forward. According to JP Morgan, iron could reach 660 megawatts of contracted critical IT loads by 2026, enough to support around 250,000 GPUs and an estimated $6 billion in annualized cloud server revenue. Some people were saying that essentially JP Morgan today, with this announcement in terms of what their analysts have come out with, is taking a dig at the Bitcoin's footsteps and saying essentially AI data centers are better than Bitcoin mining. Some people just saw it as valuable information essentially, and it is factual information as well that this is actually happening. Not every Bitcoin mining corporation essentially is doing this, but some have shifted over to AI data centers. Now, Japan is what we're going to talk about next on tonight's live. Moving away from JP Morgan to Japan. But before we do that, let's go to the comment section first. As I previously, this is live, which means if you do have any questions, go for the comment section. More than happy to help you out. So let's see what's happening in the comment section. I viewed a video a few days ago that there may not be any XRP left soon. What is your opinion, Miles? Regarding people essentially releasing videos of there may not be any sort of, and I've seen a few, I've seen a few on X or even on TikTok, people talking about there might not be any more XRP left in the world and so on. There'll always be some left. It's essentially on that topic. Is what I would say. The idea that there's going to be zero XRP left and it's all going to be gone, it's difficult to believe, because XRP in general is going to be used as a middleman in terms of transactions, so it's always going to be bought and sold. Now, I thought Judge Torres ruled that Ripple couldn't sell XRP to institutions as a commodity, but only as a security. So it's ETFs or securities. ETFs technically are also commodities as well. Do you have a plan if XRP goes up to $100 or $125 in the next 30 to 60 days? If it goes on essentially in the next 30 to 60 days, and I know a few influencers have been pushing essentially this price point of XRP. I'm not going to name who the influencers are on X, but I know a few that have been pushing this price point of XRP reaching essentially $100 to $125 in the next 30 to 60 days. A lot of things need to happen essentially for that to be happening. I'm not saying it's never impossible, because I've said before that I believe that XRP can also reach massive price points. But a few things, green lights, as I said for the longest time, those green lights have to happen. So if that happens in the next 30 to 60 days, what would I do? 120. I would probably borrow against some of it. What do you think the supply, or even, borrow against some of it. When do you think the supply shock for XRP this year or next? Regarding a supply shock situation, which is exactly what Scott was describing regarding the video you saw, that be no more XRP left. XRP is always going to be brought and sold essentially because of what it's going to be used for, the purpose it's going to be used for. Obviously, banks storing XRP is going to be happening as well. Institutions storing XRP, that's going to be happening as well. People holding XRP in ETFs, that's also going to be happening as well, which gives XRP that strong foundation as well. That there might be some selling on the side, but there's also that strong foundation of a lot of people holding in terms of the ETF. It could be institutions, it could be retail section, it could also be banks storing XRP because they're going to be using it as a middleman currency around the world. With Ripple also having access to the banking sector regarding purchasing G Treasury or Hidden Road, now named Ripple Prime. Also, the Fed Master account they're applying for. There's a lot of situations. And regarding the supply shock situation, yes, it will happen. But when do I think it's going to be happening, this year or next? This year is coming to an end, to be fairly honest. So if there's a supply shock situation, it is going to be next year. But in terms of this year, we still have 1 month left. Everybody thought that we're going to be completely going downhill until the year's end, but I have been keep on saying that, essentially on Telegram especially, I have been saying that, once the majority thinks one thing is going to be happening inside the crypto sector, tends to be the opposite. Everybody thought we could probably even go down to 55. Coin Signals was essentially sending out Telegram messages to everyone suggesting that we could be seeing Bitcoin at 55,000. But I was, you've always got to consider two outcomes. Considering one outcome for the crypto market space, especially a market space that's heavily manipulated due to not having the right regulations inside of it, it's stupid to think there's only one outcome on the table. There's always the multiple outcomes, and one of those outcomes were, if the majority thinks that the market's going to go on a downtrend, then everybody's going to short the market space. So reversal has to happen when people least expect it. Now, Miles, what is your opinion if someone had a bag of 11,000 XRP? What is my opinion if someone had a bag of 11,000 XRP? That is a brilliant portfolio. Honestly, you are miles ahead of the majority, to be fairly honest. What about 10,000 in XDC? That is a great amount to have in XDC as well, to be fairly honest. Miles, do the ISOs make any difference to XRP's tokens? No. See, regarding ISOs, which is something that we talked about a while ago, but everybody, on X especially brings it up. Regarding ISOs, we have the ISO 22, we also have the ISO 77, if I'm not mistaken, which is the security side of it. The banking infrastructure did upgrade. Now, I do have a friend, for example, as I said, inside the banking sector, which I've never named and I'm never going to name. But regarding him, I even asked him essentially yesterday regarding the banking sector, regarding the ISO situation, and he did say that essentially it is they are going to be upgrading the systems, and essentially some banks are a little bit delayed than the rest. Some banks already upgraded their systems, but does that have any impact on cryptocurrencies? Not for the time being, no, because more infrastructure is still needed, but more infrastructure is on the way, to be fairly honest as well. But I know a lot of crypto influencers out there have been promising people a lot of things regarding ISO situations. There was, but ISO is essentially one of the barriers for XRP, XLM, XDC. So it is one of the barriers, to be fairly honest. There was so much hype regarding ISOs. Yes, there was. There was a lot of crypto influencer hype regarding that. What is the chance of an XRP? What is the chance of 100 XRP? Not that far off is what I would say. Honestly, if we get those green lights that I've been talking about for the past 3 years, if we get those green lights inside the market space, one of the main ones being regulations, and one of the main ones being a Clarity Act. And I did say there are two outcomes straight after the Clarity Act. The first outcome after the Clarity Act is that essentially a Clarity Act will happen and then nothing happens afterwards. And people are essentially getting frustrated. We thought a Clarity Act was what was needed inside the crypto market space. Why is there nothing happening? And that is a tactic essentially that might be used by institutions, you can pretty much say, or even by some jurisdictions around the world to manipulate the market space and think that nothing is going to be happening. And then you would have the movement happening inside the market space, because the Clarity Act actually does bring utility towards the table for pretty much all cryptocurrencies. The second outcome would be straight after the Clarity Act, we could just see the market slightly going up and up and up. Now, either way, the market's going up. One could be a little bit of a delay, then up. One is just straight up. Now, regarding XRP at $100, XRP at $1,000 is not far off if we get the green lights. XLM is, XRP can, without a doubt, hit high value. 100% I agree. 1 billion% I agree. Yes. And I did the calculations once on this live show where I talked about essentially XRP's price points regarding just G Treasury and Hidden Road. I said, put everything aside, just G Treasury and Hidden Road easily can push essentially the price of XRP to $1,000, depending on how they essentially go forward. Just easy, just those two. Putting aside every other essentially, institution that Ripple has partnered up with or is even using Ripple payments. Just putting all those aside, just Hidden Road, which is now Ripple Prime, and G Treasury, just those two together bring astronomical value to XRP over the long term. Miles, XLM is doing some great things behind the scenes as well. I agree, yes, XLM is a great project from my point of view as well. Miles, Swift just dropped a bombshell that they will be utilizing ISO in January 2026. Yes, that is a massive bombshell. And also regarding essentially ISO and XRP and Ripple. So on the board of the ISO, Ripple is on the board of ISO. No token, as I said essentially a long time ago as well, no token is technically an ISO standard. However, because Ripple is essentially on the board of the ISO, it does make essentially an XRP is compliant, but not an ISO, as I said a long time ago as well. Those influencers always fail to mention the escrow unlock first of every month too. Yes, they do. And for some reason, we're still getting news articles till this day about essentially Ripple is essentially selling 1 billion tokens this month. And it's the same thing that's been happening for over 5 years or 6 years, 7 years. That Ripple releases 1 billion, essentially uses 200, puts the rest back in the escrow. It's the same thing that happens every month. But I don't know why some months it gets over-exaggerated. But yeah, I agree, Jason. So the true impact of cryptocurrencies is 2 or 3 years away. I wouldn't say 2 to 3 years away, no. That's right above ISOs. It doesn't push the price up, just like there are more to the picture. I agree, yes, 100%. Swift is adequate and needs to get out of the way. I agree also regarding that as well. Swift is a dinosaur that essentially used to be a dinosaur that did adapt to essentially a digital world. And that's only because essentially of what Ripple did inside the banking sector that made Swift essentially as fast as they could move forward. As I said previously, the day that Swift essentially decided to enter the crypto market space was quite interesting, the blockchain sector. It was the exact same day, essentially, that Ripple got its name alongside Swift in the Bank of International Settlements document, the PDF document, public information. On the title, essentially saying cross-border payments, Ripple got its name alongside Swift. That is pretty much the start date of when essentially Swift became a lot more vocal towards the blockchain sector. And then somewhere down the line started to hate on Ripple and say nobody's going to use Ripple or XRP technology, is what essentially members of Swift said. But that just shows their incompetence and essentially how scared they are of Ripple's footsteps inside the financial sector. And a lot of countries don't like using Swift. Russia doesn't like using Swift. China has its own payment infrastructure, just in case one day essentially, Swift decides to sanction essentially China due to the US telling them what to do. Even China has their own essentially payment infrastructure ready so that they don't get damaged any sort of a way by sanctions. So there's a lot of countries that don't like using Swift. And it's mainly to do with, as I said previously, Swift is, yes, it's a messaging standard, but it's also a political tool that goes around the sanctions countries. And that's why, as I said previously, it doesn't matter how Swift starts marketing itself towards the rest of the world, it's still the same company that sanctioned countries. Not because essentially they did it, but because they were told what to do. Whereas Ripple can't sanction countries, and neither can the XRP ledger. Which essentially puts XRP Ripple here, Swift here, because Swift is political, whereas Ripple XRP is not. Like a repost, guys. Let's go. Joe, facts. If you haven't smashed the like buttons or the retweet buttons, smash the like buttons and smash the retweet buttons. Now, like and repost, guys, facts. Yes, Miles, let's go. How you doing? What about conservation? Good project is what I would say. Actually, DAG, in other words, is what you're talking about. It's an interesting project, not good project. Interesting project. It's not a must-have. If you talk about DAG, if I'm not mistaken. Do I still get to invest in Coinmove? When the doors open, why not? Now, Japan is why I'm going to, essentially what we're going to be talking about next on tonight's live. So, Japan essentially proposes 20% crypto tax influencing regional policies. When countries introduce crypto regulations in terms of tax policies, it's extremely bullish, essentially, as long as it's not 40% or 60% tax on cryptocurrencies. 20% seems like the standard rate going essentially forward. Yes, it's DAG. Yeah, DAG is not a must-have at all. I would say for the longest time I've said that as well. When I've been asked in the past, DAG is not a must-have project at all. Must-have projects, in my point of view, not financial advice: XRP, XLM, XDC, HBAR, AVAX. These ones are, essentially good ones to have in your portfolio. Solana, Ethereum, so on. But XRP is a must-have. Not financial advice again whatsoever. So Japan. Japan proposes a flat 20% tax on cryptocurrency gains, replacing variable rates up to 55%, hurdling a major regulatory shift is set for legislative essentially review in 2026. This essentially shift also positions Japan as a regional competitor to Singapore and Hong Kong, potentially impacting trading activity and compliance frameworks within Asia's essentially crypto market space. Japan's Financial Services Agency, the FSA, plans to introduce a flat 20% tax rate essentially on cryptocurrency gains. This action replaces the previous system that was up to 55%, which was stupid and ridiculous to start off with. The move, spearheaded by the FSA, aims to essentially reclassify the 105 cryptocurrencies, including Bitcoin, Ethereum, and XRP, as financial products. It marks a change from taxing crypto essentially as an income to aligning with stock capital gains taxes. Japan is now viewing cryptocurrencies as stocks, which is 10 times better than what they viewed it previously for, to be fairly honest. Immediate essential repercussions involve enhanced compliance structures and market activity essentially changes. The banking sector may also witness increased regulatory channel engagements, while retail consumers face lower tax burdens and potentially boosting domestic crypto participation. These changes have major political and economic implications as Japan positions itself closer to regional tax norms. However, experts argue that 20% rates may still limit competitiveness against countries like Singapore that have zero crypto taxes. And CZ, the former CEO essentially of Binance, said 20% remains essentially and may not sufficiently encourage widespread cryptocurrency adoption compared to other crypto-friendly jurisdictions, which again I agree, but Japan was sitting at 55%. 20% seems more reasonable is what I would say, but preferably zero crypto tax is even better. While increasing crypto market stability, the new crypto tax scheme could encourage domestic essential investments and minimize capital flight. Analysts suggest essentially possible long-term gains in institutional interest due to regulated crypto distribution channels. The most interesting factor about Japan introducing 20% crypto tax today, out of all days, 2 days ago, essentially 3 days ago, it came out that 7 behemoth Japanese essentially institutions entered the crypto space with $2.5 trillion on the table. The Japanese FSA greenlights them. 3 days ago, this happened. Today, the tax rate for capital gains on cryptocurrencies goes from 55% to 20%. Did it have anything to do with the 7 behemoth Japanese companies entering the crypto space? That the FSA just suddenly in Japan changed its mind, but 45% tax? Most likely, yes. This is essentially the influence institutions have on the crypto market space, where the FSA goes from 55% tax to 20% tax to please these institutions, which we love anyways because they bring liquidity towards the table. Data suggests that Japan's decision will likely support greater transparency and disclosure essentially in crypto markets. Historical precedents do indicate essentially that these actions may broadly simulate market growth within Asia, essentially maintaining influence in the global crypto policy environments also. Now, before we talk about the next news on tonight's live, which is regarding Amazon, let's go to the comment section again, and then we go straight into the next news. The next news is regarding AI and Amazon. How does that 20% compare to other countries? Great question. So, regarding the Middle Eastern countries, essentially the UAE, Bahrain, Kuwait, Qatar, they're on the side of pretty much zero, you could pretty much say, regarding cryptocurrency taxation. The EU stands somewhere between 20% as well. Singapore is 0. Hong Kong is standing somewhere around 20% as well. The UK is standing somewhere around 20% as well. America still hasn't said where they're standing on the tax policies of cryptocurrencies. We have the idea that it could be at 0%. We also have the idea that it could be 20%, which is more leaning towards 20%. Canada still hasn't established where they're standing in terms of crypto taxations as well. The borderline is 20% or 0 is what I would say. Some countries are standing at 0, some countries are standing at 20%, and some countries were at 40. I mean, the EU was starting at 40% for a while, and then they, changed their minds, went back to 20%. Japan was starting at 55, went to 20% now. So the standard is 20% or 0. Now, Amazon, a great question, because some people might want to know essentially where we stand on cryptocurrencies. But I could get a list for tomorrow's live show, probably, or the day after, regarding where taxation stands in essentially different jurisdictions around the world, if anybody wants to hear it. So, Amazon, in terms of what JP Morgan said, where they're betting more on AI, essentially AI data infrastructure centers than Bitcoin mining, and regarding Michael Burry's bet that we are going towards a AI bubble burst, which is a massive bet that Michael Burry's put down, same guy that essentially predicted 2008 market crash. Amazon is now committing $50 billion to AI, which is massive. A $50 billion AI infrastructure is what Amazon is committing to. So on one side, you have Michael Burry suggesting that the market could be tanking and AI bubble burst is on the way. On the other side of the spectrum, you do have quite heavy investors coming in for AI. So this development underscores Amazon's commitment to expanding its AI capabilities. Also, if you're wondering to yourself, what does the AI market space would have? What's the influence on the crypto market space? Bitcoin tends to follow tech stocks. So if Bitcoin follows tech stocks, then essentially the AI bubble situation burst that we might have will obviously impact Bitcoin's footsteps as well. So Amazon is set to advance its AI and supercomputing capabilities, with a major $50 billion investment plan announced by the CEO, essentially Andy. This significant financial commitment over 5 years aims to accelerate the company's infrastructure for AI and for machine learning inventions. Key leaders involved in this initiative include Swami and Adam, who play essentially pivotal roles in essentially guiding AWS's technological progress. The investment is directed towards building data centers, creating advanced silicon technologies such as Ethereum, essentially, and other essentially sectors, and enhancing high-performance networking systems. This will help cater to expanding AI and machine learning essentially needs. Ethereum and tokens like essentially Render, Akash Network, and Fetch.ai are witnessing increased activity as investors are anticipating a boost in AI-linked also crypto projects. Financial markets reacted with Ethereum and related AI tokens experiencing price volatility and higher trading volumes as well. This surge in activity essentially is attributed to investor speculation and also optimism about Amazon's ambitious infrastructure essentially expansions. Social sentiment and trading communities also see heightened interest, with decisions trending on major platforms. I just want to point out one thing regarding essentially the AI infrastructure sector. Regarding crypto AI projects that are skyrocketing in price because Amazon is committing $50 billion to AI infrastructure, it doesn't mean Amazon's $50 billion is going to be entering into those AI crypto projects. It just means that Amazon is going to be investing into their own AI infrastructure. So the reason why crypto AI projects went up on this news and went essentially at a little bit higher price points is because of speculation. Because they're speculating that this money somewhere down the road or other money could be entering into AI crypto projects. But the truth of the matter is, it's the $50 billion is going towards AI infrastructure, most likely data centers for Amazon, not towards AI crypto projects. What's happening to AI crypto projects because of news like this is all speculation. And speculation tends to lead to volatility, and volatility tends to lead to pretty much going downwards. So you mainly still want to stick to financial projects rather than AI projects, but yet the AI market space does also impact the crypto market space in general because of Bitcoin's footsteps, because it tends to follow tech stocks. Now, Ripple is essentially building a JP Morgan rival, is essentially what the news is going on right now. And this is coming from a Wall Street CEO. A Wall Street CEO has come out and said that Ripple is going to rival JP Morgan. Before we talk about that, let's go to the conversation first. Miles, can you name a few top coins for AI and real-world asset or financial advice? Regarding real-world assets, I would say, XRP on the money for real-world assets. AVAX is on the money. Polygon is actually doing well on real-world assets. Plum is doing quite well for itself. Plume, sorry, is doing quite well for itself inside the real asset space. BNB is doing quite well in real world assets as well. There's a few other ones as well, but those ones are doing quite well. Regarding AI projects, Render, Akash Network, I mean, Hot is good on that sector, but they're not on AI, they're more on the essentially Web3 side. Relatable is what I would say. Your best chance, essentially, of what is ranking first in AI would be CMC under the category of AI. See what's ranking in terms of how much volume is coming in, and also regarding crypto projects, see who their partners are, and do they have any sort of licensings. Most importantly, going into a regulated crypto market space. But regarding also the real world asset sector, XRP on the money, AVAX on the money, BNB on the money, Polygon on the money, ARB on the money as well, Plume as well. Now, Ripple Wall Street CEO. Hello, how you doing, Lily? A Wall Street CEO coming out saying that Ripple is rivaling JP Morgan is actually quite big news, to be fairly honest. Bitwise, for example, let's just talk about the Bitwise XRP for a second before we go into what the Wall Street CEO had to say. Ondo as well. Ondo is doing massive in terms of essentially real world assets as well. Brilliant project, and a project that I essentially said on day one when Ondo was released. I said Ondo, and the other one was Python, if I'm not mistaken. Yes, it was. Yeah. Now, Bitwise XRP ETF officially went live essentially with the New York Stock Exchange on November 20th, a milestone that comes after years of regulatory uncertainty tied to Ripple's long-running dispute with the US SEC. The launch has also essentially reignited interest within the XRP community. The essentially Terraform Trading essentially CEO Sal recently suggested that Ripple is quietly laying the groundwork to build a modern competitor to JP Morgan. A Wall Street CEO coming out saying that Ripple is quietly making its way inside the financial sector and even on the verge of essentially being a competitor to JP Morgan is brilliant news. So the trading CEO essentially is the company that essentially the CEO is from is a US-based issuer and sponsor of essentially ETPs, notably focused on agriculture commodities and increasingly on digital asset exposures. It offers essentially and also offers leveraged and digital asset-oriented products, including the essentially US-listed 2x long daily XRP ETF. Bitwise Asset Manager confirmed that its XRP ETF began trading essentially on exchange as well. And regarding essentially the Bitwise ETF situation, the pre-Thanksgiving rush, shall we say, turkey trot for XRP ETF starts now. Congrats Bitwise on today's launch, is also what Ripple CEO Brad tweeted out as well. Bitwise called the ETF debut a milestone day for XRP community, emphasizing that the product aims to offer simple access to XRP as an asset, position itself as a contender in modernizing global payments. And this is all happening in terms of, the CEO, the Wall Street CEO. The reason why I keep on going back and forward on Bitwise XRP ETF and back to the Wall Street CEO is because the Wall Street CEO is mentioning that all these XRP ETFs are coming out. On the side of that, Ripple applying for that banking charter license, applying for that Fed master account, acquiring companies out there for billions of dollars and closing these deals, these acquisitions that they're making, naming essentially, one of them Ripple Prime, G Treasuries out there, Meta. I mean, the list just goes on of how much Ripple has expanded, not just inside the United States, but on a global basis as well in terms of licensing and what the licenses that essentially still applying for. So, speaking to essentially the investor and market experts, Paul Barron and essentially the Wall Street CEO, argued that XRP's next major price catalyst will not come from a single breakthrough application. Instead, he believes regulatory clarity is what's going to give essentially XRP that rocket boost it needs. In the US, and a formal banking license for Ripple would unlock institutional scale liquidity and transform XRP into a core treasury and settlement asset, which is facts. I've been saying this for the longest time. The last, essentially, the last hurdle for XRP is getting regulations. A Clarity Act would give XRP that boost. A banking license and a Fed master account on top of that, or what the Fed is calling now a skinny master account, would give XRP that edge against any other blockchain project out there, and also being inside the banking sector, because it no longer has to rely on banks when it is a bank itself. Such a move, he said, would put Ripple on a trajectory similar to traditional global banks. With banking compliance, access to payment networks, and essentially custody capabilities, XRP could serve as a capital reserve or liquidity tool rather than just a digital asset for cross-border remittances. This aligns with broader trends in blockchain adoption, including tokenized treasuries and institutional settlement products. They are building literally, this is what the Wall Street CEO said, word for word. He said, Ripple, essentially, they are building literally a JP Morgan rival. Once Ripple gets their banking license, they're going to be incredibly capitalized, said the Wall Street CEO. I just think that Ripple is a machine. It is a highly disciplined team, creative people that work as a team. They all have different paths that their essentially lives take them on, but they stay in the ecosystem and they're creating a bigger ecosystem, a more robust ecosystem. Ripple is at the center of the universe. It's coming from a Wall Street CEO saying these words essentially in Ripple's favor. A future Ripple Bank backed by clear US regulations is what he expects will unlock the next major wave of growth for XRP, not just new apps or developer tooling. Yes, adding to the XRP ledger in terms of developers brings utilities or indirectly because more people start using XRP ledger. And there are other factors in play as well. But yes, a Clarity Act and a banking charter license, a Fed skinny master account, it just puts XRP over the edge. And especially hearing this from a Wall Street CEO in an interview, suggesting that XRP, essentially Ripple, will be a rival to JP Morgan, that Ripple is going to be the center of the universe, and that XRP's price is going to go absolutely through the roof, is pretty much the confidence you needed to know that if you are holding XRP, you shouldn't have any worries whatsoever, because it seems like Wall Street is on your side. On that note, that Wall Street is on your side if you're holding XRP, and that they're actually seeing that Ripple is at the center of the universe, and that XRP essentially is going to be skyrocketing with a banking license, rivaling JP Morgan, and no longer relying on banks because they will become a bank. What more would you like to hear? We have also come to the endings of tonight's live as well. So, if you're watching this for the first time ever, this is called the CMF Live, stands for Crypto Mouse Family. My name is Miles. You can tune into this live Monday to Friday, 10 p.m. London time onwards. So for the next episode of CMF, it's tomorrow, 10 p.m. London time onwards. An episode, essentially 409, will air tomorrow. Obviously, before we do go, let's go start the conversation first. But I just want to say, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune this live Monday to Friday, 10 p.m. London time onwards. For the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. If you want to be informed about all those topics, tune to this live show Monday to Friday, 10 p.m. long time onwards. Before we go through, essentially, before we do go, let's go through the comment section first, and then we go, and then we'll call tonight. In other words, let's see where we're at. So the comment section, all the information Miles has given us. I hope that anyone did cost average XRP in the last few weeks. I hope so as well. Price is very low. Share the live. Let's go, Scott, Stormy. Let's go. Hi, Miles. The CMF. Everyone is all good. Ronnie, good to see you. How you doing, brother? You tuned in right at the end of the live show. Miles is hot. Still a good project, in my opinion. Yes. Having a certain amount, yes, not more than that. Is there a set time frame from Ripple's initial application for their banking license? If I'm not mistaken, yes, there is a 3-month period, if I'm not mistaken. More uplifting news. Let's go. More XRP. Let's go. Night, Miles of CMF. Joe, see you tomorrow, same time as usual. Good night, Miles, and thank you for another wonderful night. Let's go, funky brother. See you tomorrow, same time as usual. Thanks for everything, Miles. No problem, Scott. 8-time, brother. Good night, CMF. Funky brother. Let's go. By the way, thank you so much to everybody who liked, essentially outside the live show, comment, essentially liked. Thanks so much to everybody who commented outside the live show, smash the like buttons and the retweet buttons, and essentially if you're watching this on YouTube, thanks so much to everyone who's also liked the live show as well. If you followed and subscribed during this live show as well, welcome to the CMF family. Congratulations on episode 108. Let's go, Scott. Miles, thanks for another great evening, mate. See you tomorrow. Adi, see you tomorrow, same time as usual as well. Great live, Miles, as usual. Good night, Miles, the CMF. Jason, let's go. See you tomorrow, same time as usual, brother, as well. I love my family. Let's go, Scott. Great show. Glad to see you back. Take care all. Let's go, Ray. See you tomorrow about the same time as usual. Thank you a bunch, Miles. Really appreciate it. Night all. Let's go, Lena. See you tomorrow, same time as usual as well. Another awesome show. Thanks, Miles and CMF. Mickey, no problem, bro. See you tomorrow, same time as usual. Good night, Miles and all the CMF. Thank you for a great live and news. Let's go, JP. See you tomorrow, about the same time as usual as well. Night. Let's go, Denise. See you tomorrow, same time as usual. Good night. Good news today. Bye now. Bye for now, all. Susie. See you tomorrow, same time as usual as well. Thank you, Miles. Good night, all. Stormy. See you tomorrow, same time as usual as well. I will be seeing everybody tomorrow, same time as usual, 10 p.m. long time onwards, for the next essentially episode of CMF Live show tomorrow, episode 409. Like, comment, follow, subscribe if you already haven't. If you have, thank you so much. See everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you're around the world. Great show, Miles. Night, everyone. Let's go, Peg. See you tomorrow, same time as usual as well. I'll see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. CMF members, see you all tomorrow. Love you all. See you tomorrow, same time as usual. And as usual, the disclaimer of this live show, not financial advice, not political advice, and whatever I say is only for entertainment purposes. See everybody tomorrow, same time as usual.